Hello and welcome to ACC100. In today's video, we will be looking over Chapter 8, Long-Lived Assets. So an overview of what we are going to be doing in this video is looking at the concept of depreciation. Long-lived assets are used up over time and we must know how to calculate this amount. There are four pieces of information that we need to calculate the cost of use. The first is the acquisition cost. This is basically the cost to buy the asset plus getting it ready for use. The second is the date the asset was ready for use. The third thing is the estimated useful life. This is how long the business will keep and use the asset. It is important to recognize that it is not equal to the total life. The fourth and last thing is the estimated residual or salvage value. This is an estimate of how much money the business will get when it sells the asset at the end of its useful life. It could be zero if you cannot estimate it or if you think you won't likely sell it. A recap of some of the definitions. Tangible assets are physical assets that we can see and touch or move around. Intangible assets are non-physical assets, which represent legal rights recorded. For example, website, software, trademark, and license. The third thing is depreciation expense. This is basically when we record the use of asset for the current period only. And lastly, accumulated depreciation. This is a contra asset account, which basically means it has the opposite effect of an asset account, which we use to record the total use of the asset since the date it was purchased. So we will now be looking at Chapter 8 problems, and we will be looking at example PQ 8-5 in your textbooks. This is practice question 8-5 in your textbooks. So it says that we purchase equipment and have the following information. We have the cost, which is $133,500, the ready for use date, which is January 1st, 2016, the estimated useful life, which is 5 years, and the residual or salvage value, which is $13,500. So we are first asked to do the following. We are first asked to calculate the depreciable amount. So we know that the depreciable amount is our cost minus our residual value. So in this example, we see that our cost is $133,500 minus our residual cost, which is $13,500. From this, we will get a depreciable amount of $120,000. Next, we are told to calculate the annual depreciation. So annual depreciation is basically the yearly depreciation. We see in this question that our estimated useful life is 5 years. We will then take our depreciable amount and divide it by the estimated useful life. So in this example, we have our depreciable amount of $120,000, and we will be dividing it by 5 years. We will then get an annual depreciation of $24,000. Lastly, the question asks us to calculate the monthly depreciation. Monthly depreciation is getting the depreciation per month. We can simply do this by taking our annual depreciation and dividing it by 12 months because 1 year has 12 months. So in this example, we will be taking our previous number that we calculated, which is 24,000. So it will be 24,000 and dividing it by 12 months. We will then get a monthly depreciation of 2,000. So the next thing this question asks us is to complete the chart, which I just have copied and pasted into this Excel sheet so it's easier for us to follow along. So this chart here has our depreciation expense, accumulated depreciation, and the book value for the years from 2016 to 2020. So on December 31st of 2016, we know that we have a depreciation expense of $24,000. How did we calculate this? Well, we know that our ready for use is January 1st, 2016, and the year end here is December 31st, 2016. That is 1 full year. So here we have an annual depreciation of $24,000, which is 1 year. So our depreciation expense will be $24,000. Our accumulated depreciation here again is just $24,000. And lastly, our book value is calculated by taking the cost of the equipment and subtracting off the accumulated depreciation. So here in our example, we have a cost of $133,500, and we will subtract off our accumulated depreciation, which is $24,000, to get a book value of $109,500. We will then go on to the next year, which is 2017. We'll be doing kind of the same concept. So from January 1st, 2017 to December 31st of 2017, it is one full year again. So our depreciation expense will just be equal to our annual depreciation, which is our annual depreciation is equal to 12 months. So because we have 12 months here as well, we will have a depreciation expense of $24,000. Our accumulated depreciation, again, if we remember from the definition that we talked about earlier in the slides, is basically the total amount of depreciation that we kind of accumulated from this equipment since we got it ready for use. Therefore, our accumulated depreciation is basically our depreciation expense from this current year, plus the accumulated depreciation that we calculated in the previous year. So in 2017, our accumulated depreciation will just be $24,000 plus $24,000, which will give us an accumulated depreciation of $48,000. Again, to calculate the book value, we will take our cost and subtract off our depreciation expense. So $133,500 minus $48,000, which will give us $85,500. So I would like for you to now pause the video and do the depreciation expense, accumulated depreciation, and the book value for years 2018, 2019, and 2020. Let's see how you did. So I have just bolded the numbers just to represent that these are the answers. So let's go through them and see if you got them correct. So December 31st of 2018, the depreciation expense is $24,000. We basically know that from December 1st of 2018 to December 31st of 2018, it is one full year, so our depreciation expense will just be the $24,000. To get our accumulated depreciation, we will take our depreciation expense from 2018 and add on the accumulated depreciation from the previous year, which was $48,000. Which will give us an accumulated depreciation of $72,000. Again, our book value is $133,500 minus $72,000. Next, we have December 31st, 2019. Same thing again here. It is one full year, so our depreciation expense is $24,000. Our accumulated depreciation is our $72,000 plus $24,000, which will give us an accumulated depreciation of $96,000. And again, to get our book value, we will just take our cost minus our cumulative depreciation, which is $133,500 minus $96,000. And the last year, which is December 31st of 2020, January 1st of 2020 till December 31st, 2020 is one full year. So we have a depreciation expense again of $24,000, accumulated depreciation of $120,000, and a book value of $13,500. That basically completes the end of the chart that we have to do here. We will now be looking at the next step of the problem. So the question now asks us to record the depreciation expense for December 31st, 2016 and December 31st of 2017. So this is basically the chart for 2016. So on January 1st, we have to make an entry for buying the equipment. So if we remember, we bought the equipment for $133,500. So our equipment account will increase by $133,500. And because we probably bought this on account, our accounts payable will go up by $133,500 as well because it is a liability. On December 31st of 2016, we see that we have a depreciation expense of $24,000. So we know our depreciation expense will increase by $24,000. And our accumulated depreciation will decrease by $24,000. If we remember from the definition, accumulated depreciation has the opposite effect of an asset account because it is a contra asset account. So therefore, our balance at the end of 2016 in equipment will just be 133,500, accumulated depreciation balance of negative 24,000, accounts payable of 133,500, and depreciation expense of 24,000. So next we are told to do the same thing, but now we have to do it for 2017. I would like for you again to pause the video, fill in the chart, and we will go through the answers together. Welcome back. Let's see how you did. So on January 1st, we know our opening balances will be the equipment, which is 133,500. Our cumulative depreciation is negative 24,000, and this is just carried over from our balance from the previous year. We have our accounts payable of 133,500 because we don't have information yet whether we paid this amount off. And that is basically our opening balances. We don't have a depreciation expense here from the previous year that gets carried over because this is a new year, our expenses equal 0. So starting the new year, we don't have any expenses yet. On December 31st, we know again that we had a depreciation expense of 24,000. So our cumulative depreciation again will just decrease by negative 24,000. In our ending balances, we would have 133,500 in our equipment, accumulated depreciation of negative 48,000, and accounts payable of 133,500, and a depreciation expense of 24,000. If you look on the previous chart that we just did, you will see our accumulated depreciation in 2017 was also negative 48,000. So that's just a little way to check. We are basically finished this problem, so we will go back into our summary in our PowerPoint slide. So to summarize, in this video, we have learned how to record monthly and yearly depreciation. We also looked at how to record depreciation transactions in our expanded accounting equation, as well as filling in the chart for depreciation expense, accumulated depreciation, and book value. Some of the next steps that you can go from this video is looking at how to record the selling of an asset. There are some examples in the problems in your textbook which kind of go over this, so I think it's a good idea to look into that. For more practice questions, you can again look at more practice and solutions from Chapter 8, as well as checking out the Academic Success Center website for tip sheets, as well as looking for other videos on the Are You Connected Learning YouTube channel. And to keep up to date with support and programming, follow us on social media. Thank you for listening to this video, and I hope you have a great day.